Welcome back to the Long Put Masterclass. My name is Stephen Cox and I'm the CEO of Share Navigator and I'm a full-time options and futures trader. This is episode 4 of the Long Put Masterclass, and so far we've used NVDA as an example with the $218 put option, and we've covered the basics of the put option contract. We've discussed our break-even points, our maximum profit and our maximum loss. And we've benchmarked this strategy against shorting a stock and why we believe buying put options is a far superior strategy than shorting a stock outright. And finally, in the last episode, we discussed Delta and how Delta can impact an options price. This episode, we're going to discuss Theta. Theta is the enemy of all option buyers. But don't worry, and we'd like to emphasize at this point that all of these calculations that we're about to discuss are going to be done for you by your online broker. And we're going to show you how to use the online broker in the last episode in this series. But it's still very important for you to understand what Theta is and what these option Greeks are. So what is Theta? Well, Theta is defined as the expected decrease in the options value for every single day that passes, all else being equal. It is typically calculated as a 365-day measure converted to a daily value. For our NVIDIA put option, you can see that our Theta value is minus 0.065. That means that for every 24 hours, if the stock price volatility and interest rates remain unchanged, so nothing changes, the value of our option will decay at roughly $6.50 per contract every single day. So you can see Theta is a negative for anyone that owns options. And what we're looking for is that our delta value basically beats Theta on a daily basis for us in order to make a profit on our put option. That's what we're looking to achieve. So it's important for you to understand that Theta is the enemy of anyone who owns an option. I suppose it's the price we pay for having that limited risk that we discussed earlier on, and also the capital efficiency that we discussed earlier on in trying to short the stock without shorting it outright. And it's important to note that Theta is not linear. So what do we mean by that? That the time decay accelerates the closer we get to expiration. So options that have less than 30 days remaining experience the most rapid decay. In other words, the Theta value that we have at the moment on our 80-day put option is $6.50 per day. The value of that will increase dramatically in the last 30 days as we get closer to the option's expiration. So it's important for you to note that. And that's why when we're saying to people who are purchasers of options, choose expiries of greater than 60 days, closer to 90 days if possible, because your Theta decay is less than, let's say, a 30-day option. So I mentioned earlier on that Theta and Delta are in a race for you as an option buyer. So on the positive side, the gain side, your delta. So your delta is, you multiply that by for every $1 move downwards. That's your gain as such if the stock does move downwards. Your loss is your Theta, which is, for every day that passes, you're losing $6.50 per day. So it's really important. So that's the race, that you want your delta really to increase the value of your option at a faster rate than your Theta decays it. And it's as simple as that. So really we're looking for delta to beat Theta. So there you have it with Theta. Theta should be considered like an invisible tax for option buyers. And it forces you not only to be right about the direction. So in this case, when we're buying a put option, we want the share price to fall. So we need our direction to be correct, but we also need the speed of direction as well. Our timing has to be correct. And remember that we always want delta to outweigh Theta. Now, these terms, especially if you're new to options, might be very, very confusing to you, but they're things that you do need to know. But the great news is you don't need to do the calculations. They are all done for you in an online broker. And in episode 6 of this masterclass, we're going to show you how to use the online trading platform to calculate your potential profits in certain scenarios and use profit and loss tables. So you don't need to worry about that. What you need to take away from this video is that Theta, if you own options, Theta is working against you. It's important that you're aware of that. In the next video, we're going to discuss the final two Greeks, gamma and vega. And they're considered, one is considered a volatility indicator and the other one is the rate of change in delta. So these can dramatically accelerate or decelerate the value of your option. And we'll discuss them in the next video. And then in the final video, we'll get into the trade management and actually going and buying the put option, what strike should we pick, all of that type of information, and we'll walk you through all of that. But if you'd like to fast track your learning, please consider our mentoring service. This is where I work with you one-to-one. I can establish what level of knowledge you're at and build a plan and a training plan around that. And we work with each other for short periods of time on a weekly basis. So half-hour mentoring sessions each week in order to build in your knowledge incrementally. And simply the fastest and best ways to learn in a safe and supportive environment. Details are on the next screen. You can try it free, so you can try 1 week free. Absolutely no obligation on your behalf to continue and see what you think of it. And if it's right for you, then we'd be happy to have you on board.